Hey everyone, today we are going to talk about two companies that seem to have a good potential ahead based on their recent filings. The first one is a global leader in automotive interactive marketing that is scaling its technology frontier with a high power motor control system for EV, aerospace, and defense. And the second one is a renewable energy and EV solution provider that is expanding internationally through partnerships in Mauritius and UAE subsidiary. Together, these developments showcase how innovation in EV, tech, semiconductors, and renewable energy are creating powerful growth tailwinds for niche technology leaders with strong execution capabilities and diversified growth strategies. So, welcome to another episode of Noisemaker, where we make things simple and talk about companies that may not always come in the spotlight, but they have a strong potential for future. I am Saizal Agarwal, Equity Research Analyst at Desvelado Advisory. And today we are going to talk about two companies that are making solid progress in their business, and if current trends remain, they might keep growing even further. But before that, let's take a look at the disclaimer. So any discussion, facts or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So please conduct your own due diligence before making any investment decision. Now let's move to the first company, IZMO Ltd, which is the world leader in automotive interactive marketing solutions, which is now undergoing a significant technology expansion as well. So its subsidiary, izmomicro, it has launched a high-power motor control system for EVs, automation, aerospace and defense, already validated through supplies to major PSUs. Now, this stems for IZMO's strategic push into semiconductors and system in package design supported by IIT Madras and sustained R&D. Now, the management expects izmomicro to break even in FY26 and begin contributing to PAT and EBITDA from Q3, with revenues scaling to 200 crores within 3 years. They have also signed clients like BEL, hold on, order book of 25 crores, and Project Microsystems could contribute 30 to 40% of total revenues by FY27 to 28. And this move fits seamlessly with India's EV market growing at 49% CAGR from 2023 to 2030 and positions the company to tap into $40 billion plus global power electronics market, which is a major inflection point for IZMO. And now Nishant will be joining us. So Nishant, how has IZMO performed recently if we talk about the financials?
Yeah, thanks, Hazel. IZMO has shown mixed but generally positive financial trends with some interesting dynamics worth highlighting. Talking about the revenue from operations, it grew 21% year on year from rupees 187 crore in FY24 to rupees 225 crore in FY25. Talking about the quarterly number, it was steady but slightly volatile. Q1 FY25 at rupees 48 crore, Q2 at 59 crore, Q3 stable at 59 crore also, but Q4 at 60 crore. Q1 FY26 dipped to around 57 crore, down 5.5% year on year, reflecting near-term softness. Talking about the EBITDA, it stood at 38 crore in FY25 versus rupees 40 crore in FY24, with margins moderating to 17% from 21%. Net profit nearly doubled to rupees 49 crore in FY25 compared to 26 crore in FY24, though this was supported by higher other income. Quarterly profit varied. Q2 FY25 surged to 30 crore due to other income, while other quarters stayed around 6 to 6.8 crore. But Sejal, my question to you is, what exactly is driving IZMO's shift beyond automotive marketing into semiconductors and high-tech applications?
Excellent question, Nishant. I think IZMO's evolution strategy reflects a very sophisticated approach to value creation and market diversification. Because the company is expanding manufacturing capacity to handle larger volume, high volume orders across EV, defense, industrial markets, and this not only meets rising demand but also spreads fixed cost of the company, improves the margins over time. So importantly, defense and industrial sectors, they bring multi-year contracts and more predictable cash flow as well, which reduce the reliance on the cyclical auto advertisement business of the company. And the semiconductor and system and package initiative backed by IIT Madras, it positions IZMO as the heart of the India's tech and electronics growth, with PSU validation and order book already at place and roadmap of around 200 crores revenue. IZMO Micro represents a high margin vertical with strong long-term potential. So, Nishant, how do you see IZMO's position in India's evolving tech and EV ecosystem?
Yeah, I think IZMO is uniquely positioned to benefit from multiple converging technology trends simultaneously. The semiconductor and motor control system comes at the right time, aligning with India's electronic manufacturing push and EV adoption drive. Defense and industrial customer wins add stability, while the auto marketing business continues to generate steady cash flows. IZMO's micros expected break even in FY26 and potential 30 to 40% revenue contribution by FY27 to 28 marks a transformation in business mix. The 25 crore order book, PSU validation and IT Madras partnership highlight execution and innovation strength. With a 49% CAGR EV market and $40 billion plus global power electronics opportunity, ISMO is well positioned to scale its high-tech verticals while training leadership in automotive marketing, creating a balanced and future-ready business model.
Well said, Nishant. Now let's move to the second company, Servotech Renewable Power System Limited, which manufactures EV chargers, solar products, and power and backup products. So the company has entered into an agreement with Mauritius-based Enovra Energy Solutions for distribution of its EV chargers, solar solutions across Mauritius and surrounding regions, marking a significant step in its international expansion as well. So this is timely as the company's 12,000 unit annual EV charger capacity remains underutilized due to infrastructure bottlenecks in India under the revised PM E-Drive scheme, and as a result, solar now contributes 60 to 70% of revenues compared to EV's early dominance, and export already account for 5 to 8% of revenue, supported by 60-40 split between government projects and retail. Additionally, the company is setting up a UAE subsidiary to expand across GCC and African markets, while its investment in Rhine Solar provides backward integration to reduce supply chain dependency and ease capacity pressures. So, Nishant, can you walk us through Servotech's recent financial performance?
Yeah, Servotech has delivered quite impressive growth, though with some volatility typical of project-based businesses. Talking about the revenue from operations, it surged 90.7% year on year from rupees 354 crore in FY24 to rupees 675 crore in FY25, which is remarkable. Quarterly performance, however, was volatile. Q1 FY25 was revenue was around 112 crore, jumping to rupees 200 crore in Q2, further improving to 216 crore in Q3, but dropping to rupees 146 crore in Q4. Q1 FY26 revenue came in at profit came in at rupees 137 crore, down 6.5% year on year. On profitability side, EBITDA rose strongly to 58 crore in FY25 versus 22 crore in FY24, with margins improving to 8% from 6%. Most impressively, net profit nearly tripled to 33 crore in FY25 compared to 12 crore in FY24. However, the softer Q1 FY26 numbers, revenue at rupees 137 crore, EBITDA at 11 crore, and net profit at 5 crore, highlighting near-term pressure and the need for sustained momentum. But my question to you, Saizal, what is exactly driving Servotech international expansion strategy, especially given the domestic policy uncertainties in the EV charging space?
I think Servotech's international strategy is well timed and addresses multiple challenges as well for the company, because the company is developing onboard chargers, which is mandatory in every EV and currently mostly imported from China. So, success here could make Servotech a domestic OEM supplier across two-wheeler, three-wheeler, e-rickshaw segment, which also creates steady revenue stream, less dependent on government tenders, and the upcoming UA subsidiary in a free zone will cater to GCC and African demand, which is also supported by subsidies, trade treaties that may make Servotech's products more cost competitive than Chinese imports. And meanwhile, the Mauritius partnership ensures an exclusive distribution channel in a renewable focused geography, which also offers immediate opportunities for EV chargers and solar products. So, together with Rhine Solar's backward integration and stable 60-40 government retail mix, these moves could surely strengthen Servotech's resilience against domestic policy driven volatility. So, Nishant, how do you see Servotech positioned in global clean energy transition?
Yeah, I think the company is excellently positioned to benefit from the global shift toward clean energy and electric mobility. While India's EV infrastructure faces policy-related delays, global markets are accelerating adoption. The Mauritius partnership and UAE subsidiary provide immediate access to fast-growing markets, while onboard chargers addresses a critical import substitution opportunity at home. Their solar business provides stability during EV fluctuations, and with exports already at 5 to 8% revenues, the company has a solid base for expansion too. The ability to deliver 90% revenue growth in FY25 while nearly tripling net profit shows a strong execution. With international manufacturing plans, backward integration, and multiple growth engines across EV charging, solar, and exports, the company, I think, looks well positioned to capitalize on the global clean and energy transition.
Okay, thanks a lot, Nishant, for all this information. It really helped us to understand the direction both these companies are moving in. And now let's take a quick look at how some of our previous picks have performed. Archean Chemical Industries Limited, it rose from 672 to 702 with a gain of around 4.4%. VST Tillers Tractors Limited, it increased from 4,924 to 5,200 rupees with a gain of around 5.6%. Goldiam International Limited, it moved from 359 rupees to 395 rupees, which makes a gains of around 10.3%. India Shelter Finance Corporation Limited, it slipped from 900 rupees to 875 rupees, showing a decline of 2.8%. Pearl Global Industries Limited, it rose from 1,291 to rupees 1,334 with a gain of 3%. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape up in the coming quarters. And here is the QR through which you can access all these previous picks which we covered recently. And now let's move to the summary part. So IZMO Ltd subsidiary IZMomicro has taken a major step forward in technology with launch of high power motor control system for EV, automation, aerospace, and Servotech entered into an solution for distribution of its EV charger and solar solutions across Mauritius and surrounding regions. So that's it for today's edition of Noisemaker, and if you found this breakdown informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead, and stay informed.